Americans are on the move, and where they're going is reshaping the entire real estate market. Millions of people are packing up and relocating to different states, and these migration patterns are creating boom markets in some places while leaving others struggling. Today, we're going deep into the data to show you exactly where Americans are moving, why they're making these moves, and what it means for real estate prices, job markets, and investment opportunities. We'll look at the biggest gainers, the biggest losers, and the surprising trends that are changing the American landscape. Whether you're thinking about relocating yourself, investing in real estate, or just curious about the future of American cities, this data is fascinating and incredibly valuable. Let's follow the migration trail. The big picture. First, let's look at the overall trends. The Great American Migration. Something dramatic has happened in American migration patterns over the past few years, and it's fundamentally changing the real estate landscape. The pandemic accelerated everything. The shift to remote work during the pandemic gave millions of Americans something they'd never had before: location flexibility. If you can work from anywhere, why pay California or New York prices when you can live in Tennessee or Texas? While some workers have returned to offices, millions remain remote or hybrid. This flexibility has permanently changed where people choose to live. The main trends. 1. South and Sunbelt domination. The South and Sunbelt states are absolutely dominating population gains. Florida, Texas, North Carolina, Tennessee, South Carolina, Georgia, Arizona. These states are growing explosively. Why? Lower costs, warmer weather, no or low state income taxes, job growth, and quality of life. 2. Northeast and Midwest exodus. States like New York, Illinois, California, New Jersey, and Massachusetts are losing population. People are leaving expensive high-tax states for more affordable options. This isn't a small trend. We're talking hundreds of thousands of people annually leaving these states. 3. Urban to suburban shift. Within metros, there's been a shift from dense urban cores to suburbs and exurbs. People want more space, yards, and separation. The pandemic made urban density feel like a liability rather than an asset. Some cities are seeing return to downtown, but the suburban trend remains strong. 4. Small cities and secondary markets rising. Major metros like New York, San Francisco, and Los Angeles are seeing outflow, while smaller cities like Boise, Austin, though cooling now, Charleston, Nashville, and Raleigh are booming. 5. Retirement migration intensifying. Baby boomers are retiring in massive numbers, and they're moving to low-tax, warm-weather states. This creates housing demand and economic activity in destination states. What's driving this? Affordability. Housing costs in expensive states have become unsustainable. Taxes. People are fleeing high state income taxes. Remote work. Location flexibility has changed everything. Quality of life. People want space, nature, and lifestyle. Cost of living. Everything costs less in many migration destinations. Weather. Warm climates appeal especially to retirees. The biggest gainers, the top 5 gaining states. Florida, the migration magnet. Florida has been the single biggest winner in domestic migration for years, and it's not slowing down. The numbers. Florida gains approximately 350,000 to 400,000 people annually through domestic migration. That's more than any other state by a wide margin. Some years, Florida's population growth exceeds the entire population of cities like Miami or Tampa moving to the state. Who's moving to Florida? Retirees from the Northeast. New Yorkers, New Jerseyans, Pennsylvania residents, they're retiring to Florida in massive numbers. They're selling expensive homes up north and buying in Florida, often with cash left over. Young professionals from high-tax states. Tech workers, finance professionals, and entrepreneurs are relocating to Miami, Tampa, and other metros. Miami has positioned itself as a tech hub, attracting startups and established companies. Families seeking affordability. Middle-class families from expensive states find Florida offers better housing value, no state income tax, and quality of life. Where they're going. Tampa Bay area, fastest growing metro. Young professionals, families, retirees, everyone is coming here. Job growth in tech, finance, and healthcare. Jacksonville, most underrated Florida market. Affordable, growing, military presence, expanding port. Orlando, beyond theme parks, growing tech sector, medical city, Lake Nona, suburban family destinations. Naples, Fort Myers, retiree havens, wealthy retirees buying luxury properties. Miami, international city becoming domestic tech hub, expensive but attracting high earners. Southeast Florida, West Palm Beach, Boca Raton, wealthy retirees and finance professionals relocating. What's driving this? No state income tax. A high earner making $500,000 in California pays $60,000 in state taxes. In Florida, zero. Warm weather year-round, no winter, beach lifestyle. Job growth, strong economy with opportunities. Quality of life, recreation, dining, entertainment. Family-friendly, good schools in many areas, safe suburbs. The real estate impact. Florida's median home prices have surged. Tampa went from $250,000 to $400,000 plus in just a few years. Jacksonville went from $220,000 to $350,000 plus. Demand has been relentless. Rental demand is strong. Investors have piled in buying single-family rentals and multifamily properties. The challenges: insurance crisis. Home insurance costs $10,000 to $20,000 annually, which is now slowing some migration. Hurricane risk, regular storms and evacuations. Rising costs. Florida is no longer the cheap option. Prices have caught up. Infrastructure strain. Growth is straining roads, schools, and services. Bottom line, Florida remains the #1 migration destination despite growing challenges. No state income tax and weather remain powerful draws. Texas, the business and job magnet. Texas is the second biggest winner in domestic migration, gaining about 400,000 people annually when you include both domestic and international migration. Who's moving to Texas? Californians leading the way. More Californians move to Texas than to any other state. They're escaping high costs and taxes, bringing their wealth and entrepreneurial energy. Was the hottest market, now cooling but still growing. Tech hub, music scene, young professionals. Dallas-Fort Worth, massive corporate relocations. Toyota, Charles Schwab, and dozens of companies brought thousands of jobs. Houston, energy capital, but also medical center, aerospace, and diverse economy. San Antonio, overlooked but growing. Military presence, healthcare, tourism, spillover from Austin. Smaller Texas cities, College Station, Waco, Lubbock, even smaller cities are growing. Why they're coming? No state income tax, same as Florida, massive savings for high earners. Job opportunities. Corporate relocations create thousands of jobs. Affordable housing. Texas median prices are $300,000 to $350,000, though Austin and Dallas suburbs are higher. Business-friendly, low regulations, pro-growth policies. Strong economy. Diverse. Energy, tech, healthcare, manufacturing, finance. The real estate impact. Texas home builders have been building like crazy, creating inventory. Prices rose significantly but are now moderating in some markets. Austin saw 30 to 40% appreciation during peak, now seeing some correction. Texas offers better balance between supply and demand than Florida. More land, more building. The challenges. Property taxes are brutal. Texas makes up for no income tax with 2% property taxes. On a $400,000 home, that's $8,000 plus annually. Summer heat, extreme heat, 100 degrees Fahrenheit for weeks. Some markets oversupplied. Austin and Houston have high inventory. Infrastructure. Growth is straining roads and schools in some areas. Bottom line, Texas remains a top destination due to jobs and taxes, but property taxes and heat are real considerations. North Carolina, the balanced growth state. North Carolina is gaining about 100,000 plus residents annually, making it one of the top growth states. Who's moving to North Carolina? Northeasterners discovering the South. New Yorkers, New Jerseyans, Pennsylvanians, they're discovering North Carolina offers affordability, jobs, and better weather than they're used to. Young professionals. The research triangle, Raleigh, Durham, Chapel Hill, attracts young professionals in tech, pharma, and healthcare. Retirees. North Carolina's mountains, Asheville, and coast, Wilmington, Outer Banks, attract retirees seeking four seasons and natural beauty. Where they're going? Raleigh, Durham, the research triangle, is booming. Apple building $1 billion campus, Google expanding, universities driving innovation. Charlotte, banking and finance hub, second largest banking center in America after New York. Asheville, mountain town, attracting remote workers, retirees, and creatives. Wilmington, beach town, growing with retirees and remote workers. Why they're coming? Affordable compared to alternatives. Charlotte and Raleigh are $375,000 to $425,000 median, far less than Austin, Denver, or coastal cities. Strong job markets, tech, healthcare, finance, education. Quality of life, mountains to coast, four seasons, culture. Good schools, many excellent school districts. Lower taxes, reasonable compared to the Northeast. The real estate impact, steady, strong appreciation. Raleigh and Charlotte have seen 5 to 8% annual appreciation consistently, not the wild swings of Texas or Florida, but reliable growth. Bottom line, North Carolina offers balanced growth, good economy, quality of life, and still reasonable prices. Tennessee, the no-tax haven. Tennessee gains about 80,000 to 100,000 annually, with growth concentrated in a few metros. Who's moving to Tennessee? High earners seeking tax relief. No state income tax attracts high earners from California, Illinois, New York, and New Jersey. Music and entertainment industry. Nashville continues attracting musicians, songwriters, and entertainment professionals. Young professionals. Healthcare, tech, and finance jobs in Nashville draw young professionals. Where they're going? Nashville Metro, explosive growth. Population increased over 100,000 in recent years. Suburbs like Franklin, Brentwood, Murfreesboro booming. Chattanooga, tech hub with fastest internet in America. Remote workers love it. Memphis, growing slower but affordable and stable. Coxville, university town, growing steadily. Why they're coming? No state income tax, top draw for high earners. Nashville's cool factor, music, food scene, culture. Job growth, healthcare, HCA headquarters, tech, finance. Affordable, Nashville is $425,000 to $475,000 median, less than comparable cities. Chance of location, easy to fly anywhere in the country. The real estate impact. Nashville saw 10 to 15% annual appreciation during peak, now moderating but still strong. Suburbs still hot. Short-term vacation rentals in Smoky Mountains remain strong investment. Bottom line, Tennessee's no income tax and Nashville's boom make it a top destination. Arizona, the desert boom, with questions. Arizona was one of the fastest growing states during the pandemic, gaining 100,000 plus annually at peak. Growth has moderated but remains positive. Who's moving to Arizona? Californians seeking lower costs. More Californians move to Arizona than almost anywhere except Texas. Phoenix offers warmth without California costs. Retirees. Arizona has been a retirement destination for decades. Warm winters, golf, outdoor recreation. Remote workers. Quality of life and lower costs attract remote workers. Where they're going? Phoenix Metro, Scottsdale, Tempe, Mesa, Gilbert, and Chandler, the entire metro is growing. Tucson, more affordable, slower pace, University of Arizona. Flagstaff, mountain town, cooler climate, smaller but growing. Why they're coming? Much cheaper than California. Phoenix median is $475,000 to $525,000 versus California's $800,000 to $900,000. Warm weather, no winter. Job growth, tech sector growing, especially in semiconductors, Intel, Taiwan Semiconductor. Outdoor recreation, hiking, golf, natural beauty. The real estate impact. Phoenix saw 15 to 25% annual appreciation during peak. Market has corrected 5 to 10% in some areas as growth moderates. Still positive, but cooling. The challenge, water crisis. This is the big question mark.
Colorado River at historic lows. Some areas denied new construction permits due to water concerns. Long-term sustainability is uncertain. Bottom line, Arizona remains a migration destination, but the water issue creates long-term questions. The biggest losers. Top 5 losing states. Now let's look at who's losing the migration battle. Loser number 1, California. California is losing population for the first time in modern history. Net domestic outflow is approximately 300,000 to 400,000 people annually. Who's leaving? Middle-class families, priced out, can't afford $800,000 to $900,000 median home prices on middle-class incomes, moving to Texas, Arizona, Nevada, Idaho, and other affordable states. Retirees, leaving for low-tax states like Florida, Nevada, and Arizona. Why pay California's high taxes on retirement income? Young professionals, tech workers who can work remotely are leaving for Austin, Miami, Denver, and other cities with lower costs. Small business owners seeking lower taxes and fewer regulations in business-friendly states. Where they're going? Texas, number 1 destination for Californians. Arizona, number 2 destination. Nevada, number 3 destination. Idaho, Boise boomed with Californians. Oregon and Washington, nearby, slightly cheaper. Florida and Tennessee for those going far. Why they're leaving? Unaffordable housing, $800,000 to $900,000 median statewide, $1 million plus in desirable areas. Highest state income tax, up to 13.3%. High earners pay massive taxes. High cost of living, everything costs more. Wildfire risk, insurance costs soaring or unavailable. Homelessness and urban issues, quality of life declining in some cities. Traffic and congestion, commutes are brutal.
California's market has cooled, some areas seeing price declines. San Francisco has been hit hardest. Downtown emptied out post-pandemic, prices dropped significantly. Los Angeles and San Diego more stable, but appreciation has slowed. The counterpoint, California still has the strongest economy, tech dominance, entertainment industry, and lifestyle appeal. For those who can afford it, it remains attractive. Bottom line, California is the biggest loser in domestic migration due to unsustainable costs and quality of life issues. Loser number 2, New York, the high tax exodus. New York loses approximately 200,000 to 300,000 residents annually through domestic migration. Who's leaving? Retirees. High taxes on retirement income drive retirees to Florida, North Carolina, South Carolina, and other low-tax states. High earners. Finance professionals, executives, and entrepreneurs leaving for Florida, Texas, and other no-income tax states. When you're making $1 million plus, saving 10% in state income tax, $100,000 plus is massive. Young professionals. NYC's pandemic experience, lockdowns, closed businesses, remote work, showed young professionals they don't need to pay NYC prices. Families. Middle-class families leaving expensive suburbs for more affordable states. Where they're going? Florida, number 1 destination, South Florida particularly popular. North Carolina, growing destination. Pennsylvania, nearby, more affordable. New Jersey, though NJ is also losing population overall. Tennessee, Nashville attracting young professionals. Texas, for those seeking jobs and no income tax. Why are they leaving? High state and local taxes. New York has high income taxes, up to 10.9% state, plus NYC adds up to 3.876%. Expensive housing. NYC and suburbs are extremely expensive. High cost of living. Everything costs more. Weather. Cold winters. Quality of life issues. Crime perceptions, congestion, cleanliness. The real estate impact, NYC saw significant price drops in some areas post-pandemic, especially luxury apartments. Market has recovered somewhat, but remains below peak in some segments. Suburban markets have varied. Westchester, Long Island seeing mixed results. Bottom line, New York's high taxes and costs drive steady outflow, especially of retirees and high earners.
Loser number 3, Illinois, the property tax exodus. Illinois loses about 100,000 plus residents annually, one of the worst in the nation relative to population. Who's leaving? Retirees. Property taxes of $15,000 to $30,000 annually in suburbs drive retirees to Florida, Arizona, and Tennessee. Families. Middle-class families seeking affordability and lower taxes. Young professionals. Limited job growth compared to Sunbelt states. Where they're going? Florida, top destination. Texas, second choice. Tennessee, growing destination. Arizona, for warm weather. Indiana, nearby, much more affordable. Wisconsin, for those staying close. Why are they leaving? Highest property taxes in the nation, $15,000 to $30,000 in many suburbs. High income taxes, up to 10.75% for high earners. Fiscal uncertainty, state debt and pension crisis create uncertainty. Weather, cold winters. Limited job growth, economy not growing like Sunbelt. The real estate impact? Slow appreciation or declining values in some areas. High taxes suppress demand. Bottom line, Illinois' tax burden drives steady, relentless outflow. Loser number 4, New Jersey, the tax flight state. New Jersey loses about 60,000 to 80,000 residents annually, despite proximity to NYC and Philadelphia job markets. Who's leaving? Retirees. Property taxes and income taxes drive them to Florida, North Carolina, Delaware, Pennsylvania. Middle-class families seeking affordability. Where they're going? Florida, top destination. Pennsylvania, nearby, lower property taxes. North Carolina, growing destination. Delaware, lower taxes, nearby. Tennessee, no income tax appeal. Why are they leaving? Highest property taxes in America, average over $9,000, often $15,000 to $25,000 in desirable towns. High income taxes, up to 10.75%. High cost of living, everything expensive. Dense and crowded, some are seeking more space. The real estate impact, slow appreciation, high carrying costs limit buyer pool. Bottom line, New Jersey's crushing tax burden drives steady outflow despite proximity to jobs. Loser number 5, Louisiana, the hurricane and economic exodus. Louisiana loses population due to natural disasters, economic challenges, and limited opportunities. Who's leaving? Young professionals seeking better job markets. Families after hurricanes. After Katrina, Ida, and other storms, many decided not to return or rebuild. Where they're going? Texas, nearby, better economy. Florida, warm weather, better economy. Georgia, Tennessee, North Carolina, better opportunities. Why are they leaving? Hurricane risk, regular devastating storms. Insurance costs, expensive, hard to get. Limited job opportunities, economy struggles. Education and healthcare, lower rankings. Poverty, high poverty rates. The real estate impact? Low prices but little appreciation. Population loss suppresses demand. Bottom line, natural disasters and economic challenges drive outflow. What this means for real estate. So how do these migration trends affect real estate? The real estate implications. For growing states, rising prices. Population growth drives housing demand. More buyers than homes equals rising prices. Florida, Texas, North Carolina, Tennessee, and Arizona have all seen significant appreciation. Tight inventory. Demand outpaces supply in many growth markets. Homes sell quickly, often with multiple offers. Rental demand. Growing populations need places to live. Rental demand is strong, supporting investment opportunities. Infrastructure strain. Rapid growth strains roads, schools, and services. Growing pains are real. For declining states, price pressure. Population loss means fewer buyers. This suppresses prices or causes declines. Homes sit on the market longer. Investment risk. Properties in declining population states face appreciation challenges, harder to build equity. Rental markets weaker. Fewer people means less rental demand. Vacancies higher, rents stagnant. But opportunities exist. Lower prices can create value opportunities for investors who understand the market. For the future, the trends will continue. Remote work is here to stay. Tax differences remain. These migration patterns will persist.
Secondary markets will keep growing. Smaller cities with good quality of life will continue attracting migrants. Infrastructure investments. Growing states will need massive infrastructure investments to support population. Political and economic shifts. Migration changes political power, congressional seats shift, and economic power. Here's how to use this information. If you're considering relocating, research destination, visit multiple times, different seasons, talk to locals who've relocated, research job market in your field, calculate total cost of living, not just housing, consider taxes, income, property, sales tax, understand climate and natural disaster risks. If you're investing, follow the migration. Growing populations create housing demand. Consider investing in migration destination states. But don't chase. Markets that already boomed, like Austin, Boise, may be overheated. Look for the next hot markets. Research why people are moving. Jobs, taxes, weather. Understanding the why helps predict sustainability. If you're in a losing state, don't panic. Many people stay and thrive in declining population states. If you love it, stay. Be realistic about appreciation. Your home may not appreciate as quickly as you might think. Don't count on equity growth. Consider your long-term plans. If you're planning to leave eventually anyway, consider timing. Selling might get harder as population declines continue. American migration patterns are reshaping the real estate landscape. The South and Sun Belt are booming, while high-cost, high-tax states are losing population. These trends are creating opportunities in some markets and challenges in others. Where Americans move affects home prices, job markets, political power, and economic growth. Understanding these trends helps you make smarter decisions about where to live, where to invest, and how to position yourself for the future. The migration is real, it's significant, and it's not stopping. The question is, will you follow the trend, fight against it, or find your own path? If this video gave you valuable insights, please give it a thumbs up and subscribe for more real estate analysis. Drop a comment. Are you considering relocating? Where are you thinking about moving? I'd love to hear your thoughts. Thanks for watching. I'll see you in the next video.